gold had a very strong year, and the last 6 months it's actually outperformed the S&P. So gold had a very strong year. The gold stocks, although, I mean, they're doing well, right? Gold stocks are up. The XAU is up 25% for the year. There's nothing wrong with that. I'll take 25% for 11 months every year. You give it to me. But there's still obviously a lot of frustration that gold stocks have not exhibited the kind of leverage that we're used to and that we expect from gold stocks over gold, and we can talk about that.
Gold made headlines for outshining the broader stock market throughout 2024, but this performance is part of a larger trend extending throughout the past 3 decades. In the 21st century, gold has provided a higher average return than the S&P 500, the most popular vehicle for growth among American investors. On the other hand, the S&P 500 provided an average real return of 4.9%. Put another way, investors have gained 27.94% less from the stock market than gold in the past 25 years. Prominent financial analyst AdrianDay notes that U.S. stocks remain overvalued, driven by a narrow group like the Magnificent Seven, with 40% of S&P 500 stocks at 52-week lows. Adrien emphasizes gold's strong performance this year, outpacing the S&P 500, though many investors remain unaware. While gold stocks, including the XAU Index, have risen, they lack the expected leverage to gold prices, frustrating sector investors. Since the start of 1999, gold has skyrocketed by 866.67%, climbing from $288.25 to a 2024 high of $2,756.76. By comparison, the S&P 500 has risen from 1,228.10 to 6,001.35 points, a gain of 388.67%. In simpler terms, a portfolio invested solely in gold would have more than doubled the returns of one invested exclusively in stocks during this period. Turning to global monetary policy, Adrien observes that rate cuts are now widespread, with Canada, Europe, and Britain all lowering rates recently. He states a shift in Fed Chair Powell's tone, from insisting on bringing inflation firmly under 2% to acting as if it's on its way to the target. This signals a softened stance on inflation control. Market participants are now keenly focused on the upcoming U.S. Federal Reserve meeting, scheduled for December 17th and 18th. Investors are anticipating a 25 basis point rate cut, which could boost gold prices. Lower interest rates tend to make gold more attractive, reducing the opportunity cost of holding the non-yielding asset. Now, we present the clips of AdrianDay's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
In my view, continue to be overvalued. The U.S. stocks, they continue to be driven primarily by a relatively small group of companies. I mean, some of the Magnificent Seven have stumbled a little bit lately, but the market is still being driven by a relatively narrow number of companies. And if you look at, 52-week highs and 52-week lows, it changes, it's varied, but we're still looking right now at I think it's about 40% of stocks in the S&P hitting 52-week lows, which, is bad breadth for a market that is charging ahead the way the market is. But on the other hand, there are reasons that people are pouring money into stocks. A lot of it is passive investing through 401ks. And so that is to some extent a self-reinforcing mechanism. Gold had a remarkable year. I should have looked. I'm going to look if you'll give me a second. Gold had a very strong year. And the last 6 months, it's actually outperformed the S&P. Sorry, my computer's very slow today. The year to date, it's outperforming the S&P. And most people you talk to would not know that. They would not believe that gold had beaten the S&P. But I just checked the numbers as of now, as of when we're talking, to make sure that was correct. So gold had a very strong year. The gold stocks, although, I mean, they're doing well, right? Gold stocks are up. The XAU is up 25% for the year. You know, there's nothing wrong with that. I'll take 25% for 11 months every year. You give it to me.
Central banks have been net buyers of gold for nearly 15 years, recognizing its value as a crisis hedge and a reliable reserve asset. In his assessment, AdrianDay attributes gold's rise over the past 2 years to physical purchases by entities like the People's Bank of China, not speculative gold stocks. He describes this as a prelude, with the true bull market following historical trends starting after the Fed's September 2023 rate cut. According to the World Gold Council, the outlook for gold presents a mix of challenges and opportunities, with the precious metal poised for modest growth amid a dynamic global economic landscape in 2025. The Council expects the metal's price to rise modestly in 2025 due to factors such as central bank actions, geopolitical tensions, and economic conditions in key markets like the US, China, and India. Despite the lagging performance, Adrien highlights gold stocks' strong cash flow growth, 4 consecutive quarters of increases, the highest among U.S. sectors, making them increasingly attractive to value investors. Let's get back to the interview.
I think it's important people realize you've got to look at why gold went up for the last 2 years and who was buying and why they were buying. And the people that were buying gold and the reasons they were buying gold was why they bought physical gold. They didn't buy silver, and they certainly didn't buy gold stocks, right? The Bank of China, People's Bank of China, is not going to buy Newmont to stick in their reserves. And the Chinese consumer is not going to buy Newmont to put in their reserves, put in their piggy bank. So the reasons people were buying gold was why gold was going up and the gold stocks were not. Now, it started to shift this year, but as you say, gold stocks are still lagging dramatically over what we would expect at the beginning of a bull market. But in my view, what we saw for the last 2 years was like the hors d'oeuvre, and the main course has only just been served. Well, since I'm an opera fan, it was the overture, and the curtain is just rising. But curtain rose, the main course was served when the Fed cut rates. That, if you go back to all the periods post-Volcker, every time the Fed cut rates for the first time after a rate hiking cycle, gold bottomed and moved up. And the election just simply got in the way of that. So I think we can date this gold bull market from September this year. And as I say, the rest was just the overture. Now, the gold stocks still haven't performed dramatically just in the last couple of months, but I think there's reasons for that. One reason, obviously, is the rest of the stock market is doing well, including Bitcoin. And so there's less of an incentive to, buy gold stocks. I think that's the main reason. And of course, generalist investors have been bitten by gold stocks a few times in the last decade. And so they're going to be a little more reluctant to come back into the gold stocks, I think. But when you look at what you've seen this year, you've seen 3 quarters this year, three quarters of results where the cash flow of the gold stocks has gone up significantly quarter by quarter. There's every reason to think that in the fourth quarter, notwithstanding that big drop we got in the gold price, but there's every reason to think that this quarter, the cash flow will move up again. That is a whole year or 4 quarters of cash flow increases. The cash flow growth in the gold stocks is the highest of any sector or subsector in the U.S. economy.
Looking at the historical gold versus stock market performance can offer insights into the potential future trajectory of these inversely related assets. Experts still raise their gold price predictions even after a record-shattering rally with dozens of new highs. Based on AdrianDay's insights, How can investors capitalize on gold's historical outperformance and the current macroeconomic environment to optimize their portfolios for 2025? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.